Roth conversions and the 5-year rule. All right, this is actually important. Yeah, I'm going to have a piece of paper. I don't have my, oh man. My man Dougie B. Fresh writes in, and I'm going to share with you what he says. He says, Roth conversions. I'm 72, making conversions. All right, I salute you, sir. For those about to Roth. Man, I just came up with that. How freaking smart I am. For those about to rock, we salute you. For those about to Roth, we salute you. Actually, I say a good majority of my clients, I don't tell them to do Roth conversions. Isn't that funny? Anyway, so he's Roth conversions. Who knows that song for those about to Roth or rock? Who sings it? Put in the notes down there. If you know who sings for those about to rock, we salute you. That should be a pretty easy one, my friends. I throw a quiz at you about freaking obscure bands all the time, but this one's pretty cut and dry. If you don't know it, you probably shouldn't watch this channel anymore, okay? Because this is where the cool kids hang out. If you don't know who sings that song, you're obviously not a cool kid. All right, I'm 72, making conversions. Established a Roth many years ago. That's where my conversions have been going. Do I still have to consider the individual 5-year tax rule for annual conversions on the earnings if I'm converting into the Roth established several years ago? All right, great question. A lot going on there. So first thing we always got to remember, there's 2 types of tax you have to pay on these Roths, all right? You got to pay the premature tax, all right? Tax. And then you got to pay income tax. So I'm going to draw these down. So there's 2 types of tax you got to pay. Both have 5-year rules established to them. And we're going to show you straight from the horse's mouth here with the publication 590B on the IRS. Distributions of conversion and certain rollover contributions within the 5-year period. All right, and I'll explain this to make it simple here in just a second because it hurts me to read this, and if it hurts me, it must hurt you because you're not as smart as me. Okay. I wonder if people actually really get mad. Like, this guy thinks he's so smart. I actually don't think I'm that smart. I just like to read. Most people don't, it seems, but I like to read. I literally don't think I'm that smart. Trust me. I just wonder if people are like, I can't stand that scandaling. If within the 5-year period, starting with the first day of your tax year in which you convert an amount from a traditional IRA to a Roth, you take a distribution from a Roth IRA. All right, so within the 5-year period from the first day of your tax year, you take a distribution from a converted amount. You may have to pay the 10% additional tax on early distributions. 10% additional tax on early distributions. You immediately right there, early distributions should tell you something. That should tell you something. Additional tax, the penalty, essentially, on early distributions. Who does not get applicable? Who is exempt from early distributions? Pretty simple. Reach the age of 59 and a half. All right, so in this case, my man Dougie B. Fresh, he's 72. So we know for a fact there's no early distribution tax because he's over the age of 59 and a half. All right, hope that makes sense. Always think about it like this. Would you have to pay a 10% penalty on an IRA distribution? No. Why? Because you're over the age of 59 and a half. So if you don't have to take a 10% penalty on an IRA distribution, you won't have to take a 10% penalty on a Roth distribution either. Now the question as it comes to the second question is, how about just, are they taxed? Are they subject to income tax? All right, and that's what we're going to go to next. Finney? No. Under the age of 59 and a half, the 5-year period for determining whether is a 10% early distribution tax applies to a distribution from a conversion that is separately determined for each conversion and rollover. It isn't necessarily the same 5-year period used for determining whether a distribution is a qualified distribution. That's income tax free. All right, we'll talk about it here in a second. For example, if a calendar year taxpayer makes a conversion on February 23rd of February 25th of 2023, all right, remember, if he makes a conversion on February 25th, 2023, the 5-year period for conversion begins January 1st. Again, this is to avoid the 10% penalty, the 10% early distribution. So December 30th, he makes a conversion. You go all the way back to January 1st, 2023, 24, 25, 26, 27. In year 6, 2028, you're fine to avoid the 10% penalty. All right, just remember that. So you're saying, basically, you're saying, I do my conversion on December 31st. Basically, I don't have 4 years in one day. because it's the calendar year, the beginning of the calendar year. Now, interestingly enough, check this out. You can also make a contribution, which is, I thought you were going to take a nap. I thought Paul was going to take a nap. Let's say you made a contribution on that same day. And this is going to be a little bit confusing because I don't want to mix these, but I'm going to anyway. On February 23rd, 25th of 2023, all right, but you did it for the previous tax year. The very interesting thing is when Roth came around I've been in this business a long time, you had to do them by December 31st. It's still new to me that you can do it by April 15th or whenever the tax deadline is. It wasn't like that before. You always had to do by December 31st. So I don't know when that changed, but it's still like because I came up, I was already in the business in the advent of Roth IRAs. You see what I'm saying? Before the advent of Roth IRAs, there was no Roth IRA. I was already working when there's no Roth IRA. So for me, it's a very unique thing or newer thing that you can still do Roth IRA contributions up until you file your taxes. You used to have to do them by 31st of December. But anyway, so let's say it's February 23rd, 2023, and you make a contribution, a previous year contribution. That 5-year period, again, to avoid the 10% penalty, starts January 1st of 2022. So it's 2023, you make a contribution to Roth. 2022, 23, 24, 25, 26, and 2027, you have access to it without a 10% penalty. Maybe I'll stop with that. Maybe I'll do another video here in just a second on actually when you can take it without paying income tax. I think it will. All right, love your thoughts. God bless.